Okay, guys, let's have a little peek at what happened in the market today, because a lot did. Things got scooting. We got some worse than expected CPI numbers, and the market's reacting to that. They're panicked about what the Fed's doing. Let me tell you why this is interesting and why we're not freaked out. A, we took a lot of profit yesterday. That was a good move. B, there is an interesting phenomena that happens quarterly, and it's called the Bank of America Investor Survey Report. Now, I know I try to sprinkle this stuff in from time to time. There's a lot to say about a lot, but this is where hundreds of fund managers that manage hundreds of billions of dollars answer questions about what they're doing. So several hundred fund managers are interviewed. They're surveyed, which is why it's called the Fund Manager Survey. And collectively, these guys usually manage, these few hundred survey or fund managers. They manage $500 to $800 billion. So they represent a pretty good portion of what's going on in the market. And so it was kind of interesting that we saw this crazy wild movement from CPI news. And our bearish trade here that we've got going on the S&P is just singing a song again for us. It's making a big move. But at the same time, as we get this news right here, there's a lot of interesting things that are in the works, right? As far as how investors are positioned. Now, there's a couple of things to keep in mind. Numero uno, let's keep in mind the fact that if nobody owns stocks, can they really go down that much lower, right? Stocks go down because people sell them. Well, if everyone's already sold, can they go lower? That's a question. So just to give you guys a quick little peek at it, here's just a little site that I'll reference from time to time. But this has all the recent September 2022 Bank of America fund manager surveys. There's some pretty interesting things to look at here. Number one, right here, recession odds still rising for investors, right? So these recession odds, the odds that people think a terrible recession is coming, it's funny how the timing goes, right? This is 2008 going into 2009, pretty high. This is April 2020, pretty high, and here we are over here, pretty high, right? So March of 2009 was the bottom of the stock market. April 2020 was the bottom of the stock market. Now, is this going to be the bottom of the stock market? We're going to see. So to put in a little bit of context of how extreme things really are, that's where we're at, right? Again, bottom of the market, bottom of the market. Could get a little worse, but we got to be pretty close to the bottom of the market here. Just a lot of basics, right? Investor risk appetite. Lower than 2008, lower than 2000, certainly lower than 2020. We're dealing with major extremes here. Risk appetite is at all-time lows. This is wild. This is percent of investors that are overweight equities, right? Overweight. Now, people were pretty overweight going into 2007 at the top of the market. Everybody was overweight. By 2008, everybody was crazy underweight, right? We're below 2020 and we're below 2008 levels. We're so incredibly underweight equities right now. Investors are, money managers, fund managers are underweight equities. This is huge. Remember, if nobody owns anything, the market can't go down anymore. There's nobody else to sell. There's nothing else to sell. The selling has been done, right? So that's a beautiful thing. This is another similar kind of situation, overweight, underweight equities versus the S&P. Again, investors are... So you can see we're just at these wild, crazy, just wacky levels. We're seeing so much of this stuff, right? This is, just another chart, right? Of what we're looking at for recession and energy crises all over the place. Again, that's one of the reasons we're super bullish on energy, because there's just wild, crazy things happening across the board. Percent expecting stronger economy. Look at how many people are expecting a stronger economy. Literally none. None. Again, we're below 2020 levels. We're below the lowest part of 2019. We're below 2008. We're right we're below 2000 .com crash. So we're at extremes of people expecting a stronger economy. We're at extreme lows. This is wild. This is crazy. We have this right here, right? This is how investors are positioned. The biggest position right now is in cash, right? And then we have consumer staples, and then healthcare. Energy is this tiny little speck. Materials is basically flat to negative. We have equities and Eurozone stuff are the two least exposed to people's portfolios. Do I need to say more? We want to be in the things that are least exposed to people's portfolios. Equities right now are that. We just have some really crazy extremes that we don't see very often, except for in extreme conditions, right? As far as again going to cash and raising cash levels, here we are. This takes us back to around just below 2000 levels, but certainly higher cash levels, much higher than 2008, 2020, and so on. So you can see we're just these are just nuts, right? This is just pure craziness, and the list goes on and on. But I think that's enough to kind of make the point that everybody's scared. Everybody's gone to cash. Nobody owns the stuff that we own. Literally nobody owns it, which is why we can have terrible news today and we can see the S&P go down. I mean, 4.5%. That's a huge day, right? S&P down 4.5%. That's massive. When we see that kind of thing happen, it seems apocalyptic. We see, at the same time, Alcoa is down. Alcoa's beta, does anybody know what Alcoa's beta is? Meaning, however much the S&P moves, how much does Alcoa move, right? So, Alcoa has a beta of, let me just move myself out of the way here. Alcoa has a beta of 2.32, right? So that means if the S&P is down 4.5%, Alcoa should be down 2.5 times more than that, right? Should move 2.5 times more than that. And it moved less. It moved less. Nobody owns anything. Everybody's out of everything. So what this means is it's time for re-leveraging. Re-leveraging. This is where people start to buy stuff. This is where we have a chance to get in at the bottom of the market. Everybody's in all cash. We took some good profits. I figured there was going to be a big reaction from CPI news. But can the market go lower? It can go lower. But we're in a situation where even though the news cycle is kind of past, where we're not seeing so much doom and gloom, money managers with hundreds of billions of dollars under management have taken to the sidelines and just said, you know what? We don't know what the heck's going on. We're going to sit this one out. And when that happens, that's when markets can start to flow higher because they can't go lower. If nobody else is there to sell, they don't tend to go lower. Now, we're going to continue to watch the inflation and that whole situation, and our energy stocks and our material stocks remain our focus. But that's kind of some of the sell-off, some of the craziness that we have seen here, and that's pretty wild. That's pretty wild. So just to give you guys a little bit of context of what we've seen, tech stocks and so on took a big dip. We did great taking our profit on ARK and getting out of that and doing some of that. But now it's time to look for more opportunities to get more exposure while continuing to increase that cash balance. You can see my buying power is kind of just staying somewhat similar, but my cash balance has gone up a lot. I was a few $1,000s negative not too long ago. And so that cash balance is going up because we're replacing a lot of stuff with just options, just going with the options. So we want to make sure that we keep doing that. As far as kind of how we're positioning ourselves on some of our most recent trades, we've got some of this stuff, right? We put on a long call on CLF. That puppy dipped a little bit, but I still love it. I'm going to buy more of it, which is why it's very important, guys. When I write this stuff, I'm not just saying this as like a cover my butt kind of a trade. I'm saying this because it's true, right? I'm going to put on a small position, and I'm going to plan on adding if there's a dip. So I put on a small position. If you followed this trade alert, you said, you know what, I like Alcoa too, and I'm not putting on a small position. I'm putting on a full-size position. If I'm okay being in 10 contracts, I'm just putting on 10 contracts now. You know, I'm putting on a small position because we had a big reaction in the market, and there might be some more downward momentum to that big reaction, which we did see, right? We saw a pretty good reaction there on CLF. This is why I put these smaller positions on, because I want to be able to add to that. I still like a $19 strike. It's down a little bit. That position I put on CLF right now, you know, it took a hit today. Am I okay? I mean, I'm down $100 on it. Am I okay adding another 4 contracts? Heck yes, I am. My buying power is great. Everything's great. So yeah, I want to add more contracts, but that's why I say, you know, on some of these, especially sensitive things like call options, pace yourself on those. Pace yourself. We closed USO. We got out for just about break even, about $6 per contract loss. Pretty much break even there. We rolled UUP because remember what we have going on here, UUP and the dollar index same. We had this big spike up and I said, you know what? I'm going to roll this puppy. Remember, the market's pricing in kind of all the worst stuff. And so I wanted to roll that and I'm going to keep a continuous UUP put going for literally ever. So just go ahead and be prepared for that. And then we put another USO on and we made this one pretty crazy, right? We did this right here on USO, a 75 and 80. We went out till December. And we're saying, okay, you know, we're hoping that we're going to get some big good runs in oil, which, you know, I think is pretty likely as we go into this summertime, into the winter. I just don't see how oil can go any lower. I don't see how that's potentially or even remotely possible. And so if that doesn't happen, oil's got to go higher. There's such a massive shortage, it's ridiculous. Everything should go higher, and our USO should be a great way to have some exposure to that and get back up to some of these levels over the next couple of months. So that's kind of what I'm planning on. Okay, that's a lot to say in the daily recap, but there's some interesting, wild, and crazy things going on, and that's what I want to make sure that we're up to speed on. Okay, guys, that's it for me. We'll see you guys tomorrow morning at the market open. Should be very exciting. Thanks, everybody. Take care.